Hello everyone, today is Friday, March 4th, 2011, and I wanted to update all my readers about some really important developments this week in the dollar, gold, silver, oil, and the S&P and equities selling off. We've had to deal with escalating tensions throughout the Middle East, and especially now with Libya going into a civil war. Oil supply is being disrupted, and of course, talk of the town is oil's move. But if you take a long-term perspective, oil's move is just beginning to make a breakout from a long base going back all the way from the major decline it had in the 2008 credit crisis down to the bottom, which it reached in February of 2009. And then once we saw the bailouts, we saw oil flattening out. But gold, before all the other markets, gold started reversing higher. As you see here, the dollar had a major move as everyone was scared, pulling back from stocks, running into cash. They sold everything: oil, gold, silver, copper, equities, everything across the board. Everyone went into cash. And then even we see here where the dollar went down, the money markets, people were scared about their money market position. So it was a very scary time. Everything was being deleveraged. Hedge funds were going broke, and we saw a bottom here in gold. Then, a few months later, gold and the dollar rallied together as a safe haven in turn of 2009, in December, January, and February of 2009, of January and February of 2009. Then we saw the beginning of quantitative easing measures from the central bank and a huge amount of increase in money flow and the bailout. And we saw a tanking of the dollar and gold. And here the S&P reversed. The S&P bottomed right here in March. So right really where the dollar started tanking, we saw the S&P make this move. Now, notice here the dollar had a major rally here, which began with the European debt. So the dollar found some footing here, and some people ran from euros to gold and silver and the dollar. But what happened was QE2. Talk of QE2 when they had the May flash crash. Bernanke started talking about QE2, which is this radical measure which increase of money and a debasement of the dollar, causing the dollar to crash, causing gold and silver to break into new highs. And now, this week, we've seen on the UUP, on the ETF, a break into new lows. Okay, here you can see we have here 3-year lows. Okay, that's a major development. And that's something that the chart here does appear like a reverse cup and handle. It's very bearish. It signals that we may have to even be more cautious, and that this dollar decline into new lows may bring new interest into gold and silver miners that are rapidly turning cash into resources in the ground. So stay tuned. http://goldstocktrades.com/premium service trial. Thank you.